After multiple weeks of fits and starts where we start off the week down overnight because of tariffs, and I swear tariffs is like the drinking word of the day. Like if you drank every time that word was mentioned on business news channels, like you'd be wasted by early in the morning because that's like the topic du jour. But the markets start off south, they go up, they finish the week weak, and but that's not the case today. Today kind of was a little bit of a breakout from the norm of what we've been seeing. Yes, it's still Thursday, and yes, the market was up, but it was up kind of more than a little bit of a breakout move today. Not quite the all-time highs yet, but pretty darn close. And we'll see if that's enough to juice the market here to avoid what has been a kind of a Friday decline. If we can build on that and potentially get up to new highs tomorrow, we might be setting ourselves up for a new intermediate run, kind of a good strong intermediate run to start, especially with the overbought cluster that we just got today. So I'll break down what other patterns I'm seeing that suggest that we're leaning pretty decently bullish right now. What's driving that bullishness today? Why of all days today was the day that we kind of broke out? There are some reasons why. We'll break that down from an intermarket perspective, and our sector rotation as well picked up in the right direction. We'll talk about that and what that is. And then we took our trade idea today on an earnings that was overnight speculated. We talked quite a bit about it in our Market Outlook Live video. So we'll go over that more at the end of the video. So let's go ahead and get started. Today is Thursday, February the 13th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, check out some of these other things over here on the right, including our Market Outlook Live videos where I take a look at old trades like other trades we've done, and we're actually still in quite a few of all the trades that we've done in different market outlooks over the last little bit. So we check those out, see whether we should get in them or not. Come down to the bottom. We also, as I mentioned in the video here later, we also already put on today's trade in that live video. Again, it happens at 3:30 Eastern time. Just click on here or go up to Market Outlook Live Trade Review right there in the menu. Come down to the bottom, click this heart. It opens up this tab. Hit that like button. Click this thumbs up icon. It opens up this tab. Hit that like button here. Again, the more you do that, it helps get our content out to all of our followers on these platforms. So thank you. To those of you who do that day in and day out, those who don't, you can do it right now while you're watching with one or two really easy clicks. All right, let's go ahead and get started and take a look at the S&P 500 with the market forecast indicator. And we got a cluster today, so that's a big deal for the S&P. Let's just make sure it's refreshed here. Cluster today on the S&P 500, big deal. We closed above the 80th percentile on the near-term line and the intermediate line. The momentum line getting up to the 98th percentile. So big range today. When you include the small opening gap, we went a little bit above the average. The intermediate line still above market sentiment. That's still bullish. The near-term line, again, crossing above the 80th percentile. Taking a few days to do it. Generally, like to only take 2 days to get from below 40 to above 80. But it did it, right? Especially today, a good strong move, a little breakout today above all of these highs. This high right here at 61.20.91, we didn't quite close up above, and of course we didn't close above the all-time high that we have here yet. So, but we are now nearly 2% above the moving average. That's a good range. We like to be at 2.5%. That's kind of the magic number to be trending here. So we're not quite there yet, but dark green shading the green line, that's a really good move. So nice, strong move on the S&P, led higher by recently here by the NASDAQ. The NASDAQ also getting clustered. It did close above these highs and is really darn close to closing above the all-time highs at 22,133. You can see clearly a cluster there, all three lines easily above 80, intermediate line above market sentiment. Kind of the beginning stages of an intermediate, like when you get a cluster right when the intermediate line's kind of like this one right here. When you get a cluster right when the intermediate line's crossing above the 80th percentile, I mean, obviously not on the day of, but as close to the day of crossing, the better. then that kind of solidifies the new trend. In this case, you got a good trend going for a while. Now, again, we had an intermediate decline, so that kind of helped, and we got a bear tag. We don't quite have that here. We didn't get an intermediate decline, and because of that, we didn't get a bear tag. And we're just kind of like, we just kind of been sideways since during this little pullback that we've had. We actually did have a pullback in the Dow and the Russell, just didn't have it in the NASDAQ, and now we are close to breaking out the new highs here. So really good, strong move on the NASDAQ 100, leading the markets higher. Of course, your Dow Jones, remember, did get an intermediate pullback, but also did get clusters, again, as the intermediate line was crossing above the 80th percentile. So again, kind of helping solidify the trend. And now your near-term line is making its way. It's not above the 80th percentile. Remember, it takes 2 days. So this was technically day one. On day two, we obviously were not above the 80th percentile, which we should be. And even here on day three, we're still not above it. But, with the momentum line getting above the 90th percentile, pretty good chance the near-term line makes it there. We're not close to these highs yet. But again, strong near-term run, dark green shading a green line. We've already been bullish on the intermediate posture. We've already had clusters to solidify that. So we're already in the stage on the Dow that we're just potentially just starting on the NASDAQ 100. And then finally, with your Russell 2000, after getting a bull tag yesterday, closing below the moving average, so getting light pink shading and yellow line, we actually still have light pink shading. But you notice today we crossed above the 40th percentile and the 60th percentile. Your momentum line is above the near-term line. It's not quite above the 80th percentile. That would be ideal, but not quite there yet. But it is above the near-term line. So that's a good bullish near-term pattern. Again, doesn't guarantee that the near-term line will cross above the 80th percentile, but better chance than not. Better chance than not that it will. And obviously, if it does, you'll be also crossing above the intermediate line with both lines between the reversal zones, and that would be bullish. The intermediate line is above market sentiment still, so we're still bullish from that perspective. We have a green line. The moving average is rising. We're above it. We just don't have the light. We just don't have the dark green shading yet because the intermediate line is actually still falling. Still in bullish territory, but still falling, hence the pink shading instead of dark green shading like we had. And again, we're not anywhere close to the all-time highs. We're not close to this bear tag high that we got. That we've been kind of holding that high for resistance for a while now. So we still haven't really closed that. But the nice thing is we're also bouncing off of this bull tag, right? Which gives us a good chance, instead of starting a new intermediate decline like this one did, gives us a chance to continue this budding bullish intermediate posture that we have. All right, now let's take a look at the weekly chart for the S&P. And we got a nice good bullish candle. Again, it's not a very big body, but it's bigger than the average, right? The average of the last three bodies, it is bigger than that. It is a higher close, Hakunashi close. We do kind of have a slight candle to the downside, so it's not technically a bullish candle yet, but pretty much it's bullish, and we're above. Like, we have the green arrow. We've been above this 10-week moving average this entire time. Again, we don't have a new high yet, but it is a higher high from last week so far. Going into the end of the week. And again, depending upon how we close tomorrow, we could have a really good bullish candle to start next week. So we're really looking good from that perspective. Obviously, we have 3 green arrows here on the S&P now today, getting 3 green arrows. We've had it on the NASDAQ. We don't quite have it yet on the Dow, but obviously pretty close. And we had 3 reds yesterday when we got that bull tag. But just like that, we're bouncing back up with 1 green arrow, so a good chance that this bull tag bounces. If you take a look at the 2 line versions of these charts, again, we're back above the 8-day. The 8 is above the 17. They're both rising above the 30. The MACD, like as mentioned, it's got that green arrow there. Stochastic's back above its moving average. Again, probably not going to get a big histogram of bullishness here, so a lot of momentum. But again, as long as we kind of just continue to push and grind higher, that's okay, right? That's all we really need to see here. If you take a look at some of these other oscillators, again, we have both lines above 25. That's why your ADX continues to plummet. It was actually below 11 today. So we're not quite below 10 yet, but with both lines still high, we still don't have a trend, right? And that ADX is falling like a rock, reflecting the lack of a trend. If you look at the RSI and the CCI, we did get a pretty decent jump today on the CCI above 150. your RSI is still pretty neutral levels, at least in the upper half of that neutral range between 40 and 60. So, but not quite at bullish levels yet to kind of help confirm that CCI. The Ichimoku cloud, we still don't even have a weak trend. So, again, we're above the green line, we're above the cloud. The cloud's still green. The rate of change still positive. I mean, everything's still positive from a Ichimoku cloud perspective. But down here, you can see you have to be above 1 and above 50 combined to have a weak trend, bullish trend. And we don't have that. We don't even have that yet. So kind of goes to show how, just how weak this trend has been. You look at the Bollinger Band, look at the bandwidth. The bandwidth broke below the 150-day lows. That's rare for it to break below 150-day lows like that. But it did here. So big move, but we did move up in the upper half of that really small range, upper quartile, close to the upper band. In fact, we came really close to closing above the upper band. We're still below the upper Keltner channel, so we're nowhere close to that yet. But, the more we push up against this band, the more we push it back out of the Keltner channels, and we're able to potentially maintain this bullish posture, kind of do this kind of pattern where we go from green dot to red back to green dot, right? So green dot to red, back to green dot with this breakout. So it looks like today might be looking like it might turn into something like we saw there on this day on June 5th, where we turn back higher and continue the move that we had starting here. If you take a look at the intraday chart for the S&P, you notice we did close above last week's high point, obviously way above yesterday's high. So a higher high and a higher low, way above yesterday's high, closing above last week's high. Don't have a 4-week high point, so your green line's really dropped, and the whole entire range has dropped to extremely low levels, which means, again, like we see in the Bollinger Bandwidth, like we see on the ADX, we are setting ourselves up for a big breakout move, right? Well, a breakout move. I don't know if it'll be a big one, but a breakout move. In this case, considering that we're only $1 away from the highs, we'd have to bank on the fact that it'll be a breakout move to the upside. We have been obviously in the upper half of the 4-week range for most of the past 4 weeks. You can see that visually right here. So we've been, for a long time, we've been in the upper half of the range. We flirted yesterday with breaking below the average, but we're back above it, back above the 80th percentile, and with that late flourish closing above the 90th percentile. It's a very strong bullish close. So very good end to the week potentially that we have, at least as of today. It's a very good end of the week. I told you the range was pretty big today when you include the gap, right? So we had a gap. So with that gap here, we closed. We actually were a little bit above the average, below average on the volume. So it's not quite what we like to see. We like to see we're back above averages now. We should start seeing smaller ranges, which makes it really boring. The bullish moves will be really boring. They get small and they just grind higher. But if we can get below 1%, that's what we want to see. Smaller moves, smaller gains, but gains nonetheless, right? That's, the more we stay above 1%, the more likely we are to have some volatility, and in most cases to the downside. And we don't want that, right? So it was a good move today to get back above averages. Now we kind of need to slow down. We're not going to get moves like today more often than not. It's going to be a lot smaller than what we see. But it was good. At least today it was good to get back, to have that kind of move, to get back above these moving averages there and continue to trend to the upside. The volatility is pretty low. It's closing right at 15 by the end of the day today, closing right there, right in this case, right exactly at 15.10 on the daily chart. Well, below the 85% mark, so the first time in a while that we've been below 15 and the 85% mark. The VVIX dropping down to its lowest levels of the past few weeks. So that's a good sign, right? It's been stubbornly hanging around 100 plus. So getting to 95 is a good sign for the markets to get that VVIX down there. And if you look at the VIX relative to its own average values, it's below its 200-day moving average. That's the key level for us to be trending to the upside. So big breakdown the last few days and really breaking down today and solidifying that move below the 200-day. The problem is, the one problem that we still have is the skew remains really high. It's barely above the average today at 166, so sitting pretty much right on the average. But again, the average is rising, which is bullish. We want the average to be rising. The problem is there's just not a whole lot for it to rise. It's already, remember, 150 is extreme. So we are that far up above extremes. And it looks like this is kind of normal. This is not normal, right? Remember, the norm for this index is not to be so high. This is an extreme level here. If I were to zoom out to 20 years, this is a very, very extreme, even more extreme than what we saw in 2021. And that was an extreme. That led to a pretty darn long correction in 2022, to the point where a lot of people actually thought that was a bear market. But it was a deep, deep correction. We were so far above the 200-week moving average when that started. That's why it wasn't a bear market. Remember, bear markets actually get below the 200-week moving average, and we never did do that in 2022. We were so far up above it when we started that it took that move just to get there, that big of a move just to get there. But if you look at now, and again, I'll just kind of show the gap between the 50 and 200 week moving averages. It was such a big gap there in 2021. But if you look at where we're at now, we're pretty high compared to other levels. Well above the 2020 correction, well above the 2018 correction, pretty much right at the same levels of the 2015-16 correction, well above the 2011 correction, well above the 2007 correction that led into that bear market. So, we're pretty strongly bullish. And you can see like the histogram is still falling lower. So we're still kind of converging our way towards some, but you can see in 2021, we can, that it stayed dark green for a long time before we finally flipped bearish. So it can stay on this dark green means it's falling. So it can stay on this dark green for a while before finally turning and briefly even turn positive. You can see there's a few weeks where it actually briefly turns light green. So it can do that and still, maintain a strong bullish levels. But, we're pretty strongly bullish here up to the upside. And we're kind of hoping that we kind of follow the same pattern that we saw at the end of 2021. Even if we happen to get a correction or a pullback, a 5% little pullback here, even after that, we still had an 11.5% rally to end of the year. And I think that's kind of what we want to see. I think that's kind of what the market's expecting to see here in the first half of this year as we take all those rate cuts off the table. All right, now let's take a look at what's driving this action over the past 3 months. You can see, look, it's gold. Gold's been the big mover. Of course, QQQ has got an outperformance. IWM is actually down almost 5% in the last 3 months. Yields are flat. The dollar is flat, down a little bit. Commodities is flat, up a little bit. And like I said, the Qs are rallying, but gold's really the big. Gold continues just to be this big parabolic mover. You can kind of see the run that it's on here. Well above its moving average, and not quite the 90th percentile, but still pretty strong, over 6% up above the moving average there. You can see its DMI is looking pretty strong, well above 40 on the positive indicator. The negative indicator is below 20. If you look at the futures contracts, you don't have the gaps. You can see again that ADX is up above 30 now. So a very, very strong run, as I mentioned, going parabolic there. But the big move today that probably impacted the markets the most is this big drop in the 10-year yield. It dropped after jumping yesterday significantly higher, up to 4.63%. It dropped back down below all these moving averages, the 8, the 17, the 30. Not quite back below the 50, but big significant drops. That MACD, which had just barely turned positive and pretty strongly positive, already a dark green bar, which means it went down. The MACD is still below zero. It's above its moving average, but still below zero. So big change in direction. That was a very positive development for risk appetite to see yields coming down. Of course, the other side of that coin is the dollar, and look at that breakdown. Big time breakdown. You can see the negative indicators cross above 25 for the first time in a while, a few days right there. The negative indicators drop below 20, so that combination is very positive. Very positive for risk appetite when the dollar is dropping like this. If you take a look at the two-line version of this chart, the MACD and stochastics breaking below the 50-day more significantly than any of these other times. MACD is negative, stochastics at bearish levels. Like the dollar is on a move to the downside. That's significant because that's generally very bullish for risk appetite to see both yields and the dollar dropping as much as they are. Now, commodities have had already dropped. They've been rebounding here lately, and they actually rebounded today after a pretty significant drop yesterday. Crude oil, which had been declining, is still below all of its moving averages, including the 8 and 17 days. So that's a great combination for bullish equities, is to have yields falling, to have the dollar falling, and not just falling, they're breaking support levels, at least the dollar is. And then now commodities still falling. All three of those things. Remember, when they were rising in 2022, that's pretty much what led to most of the correction that we had. So they have the opposite, really, and kind of breaking below moving averages in all of them. It's a very good development for risk appetite just in general. As a result, we had a pretty decent breadth move today. The McClellan oscillator's it's not above 35, but at least it got back above zero after a big down day yesterday for breadth. We're not back above 500 yet, but at least we're above zero on this one as well. So we're looking pretty good from a breadth standpoint. If you look at the number of stocks above their 50-day moving average, again jumping, we're above the moving average. The moving average is above 250 now. So we need to get above 300 to really feel good about a trend. But hey, we're above 250, and that's a positive development. The number of new highs jumped up. It's not very high. It needs to be a little bit stronger, like in the 200s or so. But at least it's above, slightly, ever so slightly above its moving average. So that's a good sign. This is also a good sign when this is below its average and falling. This is the number of stocks above the 50 relative to the number of stocks above the 200, which if you look at that one, we are not back. We're above 300, so that's good, but we're not back above its average yet either. And then if I look at the net new highs and lows, again, it's positive. It's not above the average, but it is positive. So again, like pretty good breadth. Not great. It's not breakout breadth, but still pretty darn good breadth for the markets to be moving to the upside. The breadth thrust is kind of measuring when we went below 40, we had to get above 0.61, and took a little bit too long to do that to get a really good breadth thrust. And this is the number of advancers relative to total issues in the New York Stock Exchange. We're above 50%, but we're not above the average. And for us to be bullish, really bullish, we want to see it above the average, right? That's when we have a really good chance for it to going higher. The average is pretty high, so it's going to be a little bit of a limiting factor, but not too much. We can still kind of break out here and really get going if we can. So that's a good sign for breadth, and for that matter, money flow as well is not too shabby either. Right, the oscillator itself has fallen below 60, but it's still in the upper half of the range. And you remember we got that cluster today. We're close to all-time highs, and that all-time high is from over here, and we are actually pretty darn close to money flow being at the similar levels too. So things are positive. From a breadth standpoint, we have a chance to kind of really get going. Now again, what we really want to see is technology leading the way higher, right? That's the key, especially the Qs relative to IWM. You can see it's making a run. We want to see technology as a sector starting to look better versus the S&P. It's above the 30-day average for the first time in a while, so that's a good sign. If I look at the XLK by itself, here, let me bring this over here. If I look at XLK just by itself relative to its own moving average, you can see we're above the 17. H crossing above the 17 as well. The actual, we're almost back above the 50-day average. You can see the rotation is moving in the right direction as we are moving up to the right. So we're in that leading category there. It's on the daily chart. So that's what this is telling us. And when the red line gets above 102, that's when you get into the green category, which is where XLC already is. So we kind of have some rotation from into really the most important sector for the market, because that's where the three biggest companies are, as well as a handful of other very high market cap companies within the S&P 500. So it's a sector we want to lead, and it's doing its job, right? It's starting to do its job and pushing the rest of the market up along with it. We can see that here in the comparison chart for the sectors today. If I take a look at, you can see XLC and XLY have had a good 3 months. But if I just look at today alone, so it'll be February right there, you can see that's what we want to see. XLK doing well, outperforming the markets, and it's right there with XLY and XLC. XL materials are doing well today. Industrials not so well, so we're going to see how that. But remember, gold is doing so well that it's going to have an impact on a lot of these minor companies, miners, as gold continues as a trend and doesn't. Like I said before, gold doesn't look to be slowing down anytime soon. It's got a lot of money flowing into it, an extreme amount of a level of like a parabolic move going on here. You can see the bandwidth is at a high level. You can see we've been above the Keltner channel, very strong momentum. Like this is about as strong of a move in gold as we've seen over the past year or whatever the case may be, as we've seen it over such a short amount of time. In fact, if I did a rate of change on, let's go to the futures contract, and let's go out to, let's go here. Let's go to the lowest point. This would have been, I don't know when that was there, up into here. That's 38 bars, so we'll do a 37-day rate of change. So this will include that first day there. Again, you can see what a 13% rally. Again, we had a pretty decent run over there, but outside of that move, this is one of your stronger runs over such a short amount of time. You can see there, just really that July of 2020, and then this move here in early part of 2024 of last year, are the only other times that we've been this bullish on gold, and again, in such a short amount of time. Now, the problem is, like, that was a peak. Some of these others, that was a peak. This was a peak. This was a peak. This was a peak. This was a peak. So it's like we might be close to running the course on gold. So we'll see kind of what impact that ends up having in terms of what direction the dollar ends up going, because that can have an impact, right? As we know, we want the dollar to go down because that's bullish for equities. But a falling gold might end up being pretty positive for the dollar. So that's something we kind of want to watch to see if and when this move in gold has run its course. All right, and that brings us to our trade idea of the day. And what we did in our Market Outlook Live was there's quite a few stocks that were releasing earnings today. One of them was Palo Alto Networks, and we did a little bit of a speculative trade on that going into its earnings, banking on a move to the upside. As you can see, the chart, we got a cluster today on Palo Alto. We're moving up higher. We're close to 52-week highs. We're in the 92nd percentile, 9% above the moving average. You can see the dark green shading and the green line. You can also see too the candle, the nice good bullish candle that we got. Obviously, we have 3 green arrows on the stock. We're well above moving averages. We're on a strong bullish trend right now. At least the beginnings of a strong bullish trend to the upside going into this earnings. If you take a look at some of these other oscillators, they were also all pretty bullish too, above 30, below 20 on that. The RSI and the CCI were both at bullish levels, above 60, above 100 down there. The Ichimoku cloud, we were at pretty decent trend strength levels. Intermediate strength trends above the cloud, pretty positive rate of change. And then finally looking at the Bollinger Bands, we were not outside the upper band. But we were outside the upper Keltner channel. We're pushing right up against the upper band. But then earnings came out, and you can see here in the overnight session, let's see here, let's pull up Palo Alto on this chart. And you can see we're trading now at 190. That's actually down into here. So a pretty significant drop. Ends up being slightly below yesterday's low point. As of right now, of course, will probably end up moving a little bit lower right now in the after hours, and we'll see how things. This is after not just the earnings release, but the conference call, I assume, that they've had, and we'll see if we end up holding the point of control or the point of control of the last 4 weeks. This gap that we're at, and if we start to fill that in, if we hold the bottom of that gap or not. And then again, that was a pretty speculative trade. What we end up doing here was to sell the low 20 delta. We're at the low 20 delta and buy that So we position size it just like normal, but we ended up with about a 4-to-1 reward to risk ratio, which makes that risk really small compared to what we were trying to get. And now we're sitting here, like I said, at 190, so it makes it less likely we'll get that maximum gain depending upon how we trade throughout the day tomorrow. If we end up building on that loss to the downside, or if we start to fill in some of this gap towards 191 plus at the open tomorrow. So something kind of pay attention to. Again, a really low risk speculative trade based off of the earnings announcement, based off what the charts look like going in to the earnings announcement, and then seeing what we can do going forward from there. So that's our trade idea for today. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video. Join us at marketscholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.